Welcome to the Rim Break Rodeo. We hope this video helps.
In this video, I will explain how to buy call options interactive broker's easy guide. Open your IB account, enable options trading, and fund it. Use the option trader or mosaic to locate calls by symbol, expiry, and strike. Check margin requirements and review Greeks like delta and theta. Enter a limit order, set size and time in force, then monitor positions with alerts for price and implied volatility changes. Start by selecting a symbol and scanning available expirations and strikes in IB. Decide if you want conservative delta near 0, 30 or aggressive delta above 0, 60, depending on conviction. Consider weekly versus monthly expirations for time decay trade-offs. Use implied volatility rank to judge whether premiums are expensive or cheap. Finally, calculate break-even and potential return versus loss to ensure the trade fits your plan. Quick recommendation: if you enjoy reading strategy notes and market research on the go, the new Kindle Paperwhite is lightweight, has long battery life, and a glare-free screen ideal for outdoor trading prep. It stores thousands of books and PDFs so your playbook is always with you. If this video helped, please subscribe and like. Check the description for the link and other deals. Now let's get back to the video. Navigate to the option trader or order ticket in interactive brokers to place your call buy. Enter the quantity, strike, and expiry, then select a limit price to avoid slippage. Choose time in force and consider adding an attached stop or profit target order. Review margin and buying power before submitting. After execution, monitor position Greeks and market news to make timely adjustments or exits as conditions change.
Thanks for watching. Consider subscribing if we helped you.